So this is a quick tip video number 9 to answer a viewer's question, and I hope the viewer, or I'm posting the viewer's username, so I hope that person doesn't mind. And please read my disclosure. This is just for conversation only. I'm not making any tradable or investment advice, so please read my disclosure. I don't want to get sued here, so here it is. So from this user says, could you make a video about how you use price level? I'm trying to figure out why you are entering a certain price level or why sometimes you don't. Also, aren't you scared that when you buy at support, it won't actually come further down? So I can partially answer that question right now, and we can jump into the chart. So I guess the first question is my entry as far as uh, or entering a certain price level is first and foremost really it's just screen time. Um, I think I've been trading the crude oil since I started this channel, and all those time I think I started sometime last year in September. So it's a little over a year now that I've been trading, just mainly focused on crude oil, um, and that's kind of the trading instrument that I decided to choose. And that time spent watching the charts, going through charts after charts after charts. Uh, one thing that I have noticed is they do repeat themselves pattern wise in the chart. And the only way that you're gonna learn all of them, or at least most of them that I recognize that I now trade, are the ones that I've seen repeat over and over and over and over. So as far as entering wise, that's how I get a feel of whether something is going to work out or not. And I do get stopped out. I do lose, you know, but that's part of trading. You can't, realize that you're just not going to be a winner all the time. I mean, it's a loss is actually, you know, if you look at it in terms of trading, a loss is actually, part of business. It's no different. If you were to sell, I don't know, hot dog on the street, for instance, there's no guarantee that someone's going to buy your product. So if nobody buys your product, of course you lose money due to the amount of money you invest on inventory, right? So if you were to purchase contracts, or this is for trading in general, you know, you realize that you're simply a merchant. You're buying a product and hoping, if you buy something, you're hoping that you can sell it at a higher price for a profit. The difference between what you buy it and what you sell it, the difference in that is the margin, your profit margin. So realize that's just what you're doing. Like I said, there's no different to selling yoga pants on Amazon, for instance, or something to that effect. You're just selling it for a higher price and you're creating inventory. So you're simply a merchant. And as far as being scared of buying something at a dip, this, like I said, it's part of, you're never going to be right all the time, but a risk reward scenario, if you keep your risk reward scenario high, you can actually only be at, you know you can be at 30, you can only, you can be right 30%, but if your risk reward is high enough, you can actually take care of that. So we can actually work out a scenario uh, to demonstrate that, what I'm trying to say here. So let's jump into a chart, or actually let's jump in a chart. Okay, so let's work out the scenario of to resolve this uh, being more wrong than right. So let's just say for instance you're a 30% trader. That means you're only right three trades every 10. Let's just say for example, right? But your risk reward scenario is good enough, and let's just say just for the sake of numbers, um, you're risking, let's just say for CL, so for CL, your risk tolerance is $100 per trade, and the reward, the the what you're wanting to get as a reward, or your return on an investment, is 10 to 1. So that would make this $1,000, right? $1,000, just for sake of numbers, right? And like I said, you can only you only get, out of 10 trades, you only get 3 right and 7 wrong, right? So like I said, you're losing $100 per trade, but you're seeking $1,000 for reward. So so if you work out the math, right? So if you calculate your win versus your reward, so here's 3, which is your winner, times 1,000. You get, so obviously you get $3,000, right? And if you calculate against your loss, so you have 7 losses, which is $100. That's $700. So even that you're a 30% trader, is what I would say, the difference of that is still 2,300, right? So the difference, so let's see, the difference is still 2,300. Sorry about this. So the difference is 2,300. And so the question is that if you're comfortable enough with your strategy, and you know that for every time you trade that you're only going to be 3 right and 7 wrong, wouldn't you still take a risk, knowing that at the end of the day you'll still come out ahead? So that's something to think about. But you know, risk reward is very important. I mean, you have to get this kind of nailed to the head, you know, saying, you know, if I'm gonna lose $100, I better get 1,000 out of this. And the question is, can this happen, or could you able to do this? So as a if as a beginner, um, you know, trying to get a 10 to 1 risk ratio is it's the chances are, you know, it's very slim. So, and I think I've done many spreadsheets. If you watch my other videos on the spreadsheet about random number generator, you know, 1.7, anywhere from 1.7 to, I think, or 1.7 and higher would kind of put you in a more positive scenario than a negative scenario. So the higher risk reward, I guess the lesson that I'm trying to teach you here is that the higher, I mean, you know, your reward to risk ratio, the higher that number is, the better you'll be. And you know, to demonstrate that, I mean, you know, this is simple, you know, model or a scenario that you could consider, and you could tell that you know, higher risk reward or reward risk ratio would certainly still be in your in your favor if you were to trade at a higher reward risk. So that's that. So I hope I nailed that one to the head. If you have any other questions, then feel free to just keep dropping the questions. Let's see. So the other one, like I said, I mentioned, the rest is just screen time. You know, I've been kind of doing this for a while now, and you know, like I said, the more time that I spend on it, the more I get it. And losing is part of trading. So That's something you have to learn how to accept real quickly, because you're certainly not going to be a winner every day. It's just a matter of how you manage your loss and how you cope with it. Because I don't know how I remember, when I lost my very big first loss. I think I was trading equities, and I can't trade, and that hurt a lot. And I remember I was beating myself up, which was never a good thing. Now, it's more of, if you see your losses as if you're paying tuition to learn something, then take that opportunity to learn. If that makes any sense. So every loser is a learning experience, and every winner is also a learning experience. I'll leave it as that. Okay, so price level. So here we are. So actually, I put on a swing on this one because I'm kind of betting that this thing would go down, and I was hoping to scalp it and get there sooner, but like I said, I can be wrong in this scenario here, and I can actually lose. But I understood my risk and I understood my reward. If you're willing to take the reward, then and like I said, a lot of these patterns, they do repeat. So so just just watch out. If you put a lot of screen time, I'm convinced that you'll see some kind of pattern. Now, is your the way you see the market will be the same as mine? That's totally, I mean, because if everybody's a winner, there's no market. It's just a matter of figuring out, what system is profitable and what system is not. And I think I'm also, I've I've been, or I guess I've been a victim of joining, like I said, I think on my other videos or my earlier videos, I've mentioned about, joining trade rooms, paying for education. I didn't pay for education. I just bought a couple of DVDs here and there to get me started and learn about candlestick and all that. Um, but I've joined trade rooms thinking that I can get something out of there or make a quick buck doing it. But believe me, I lost more money following somebody trade, someone enter a trade, just because, for me, the reason why it didn't work out is because I just didn't like the trading style. It's just not the way I trade. This business is really, a loner's business. You're gonna be on your own, try to figure out what works, and trying to find someone that trades in a similar manner as you. It's almost a difficult challenge. But one thing we could look at now is the price level. And actually I'm seeing one right now, and which is this is a 30-minute chart, and I'm looking at this one right here. This leg move. So I'm gonna put a let's see, a retracement, I guess. So let's put a retracement here. So 52.35 is the low, and the high is 53.30. So that's 95 ticks right there, right? That's almost a whole dollar, that move. So now the question is where should I enter, right? And my answer would be, if I'm looking at this chart and it went down, it came down this low, you can almost bet that when it start retracing back up to this level here, that people would remember and they will re-enter for a short, because now they know the risk that and the reward, right? So let's just say you're a 10 tick trader, right? This is a higher time frame, so you'd really want to look at the highs and the lows. So if you break this down into, like a minute chart or a 15-minute chart, you can actually refine your entries doing that. And I think if you've seen that on some of my videos, to where I actually would go, as high as the weekly, and then break it down from the daily to the hourly, and trying to find opportunities. You can refine, you can certainly refine your risk, um, by certainly, breaking it down to a smaller time frame. So that's the kind of style of trading that worked for me. Now, is that going to work for somebody else? You know, I don't know, but for me, it's certainly I've seen this, worked, and like I said, this is a matter of patterns re-emerging or repeating itself. So I've seen it over and over enough for me to be comfortable in taking a trade, right? So let's just work out. So let's just say you're right here, 53.30. So between 53.30 and the low of this is 53.02. That's a 28 tick. This is a 28 tick range, right? So now you're thinking, okay, well, it came down $1, right? So how much am I willing to risk? Because I know somewhere over, for sure, if at one point this candle was right up here, right? And at 53.30, suddenly, the price got rejected, and it came all the way down here, and 30 minutes later it ended up right here, and then actually started selling off from there. So from there you could assume that there's a lot of sellers that are sitting right here, waiting to sell, right? So not only that, and so not only that, if I was an institution, and I want to sell right here at 53.30, let's just say, I mean, I'm just going to throw a name out there. Let's just say Warren Buffett is trading this, right? So Warren Buffett doesn't care where the price is going to head. He's probably not a good example because he's more of a fundamentalist than anything else. But I'm just throwing that name. Um, let's just say Warren Buffett says, tells his one of his employees, says sell it all at 53.30, right? Or at least an average, because I think I'm going to make money, right? So somewhere around here, uh, at 53.30, you see people already, or um, you're going to see some activity around here, around this area, selling, right? And then suddenly it comes back up, and then look, you get another seller here. So like I said, at one point this candle was up here and suddenly got rejected really quickly. And what I mean is by really quickly is that, you know, from 53.30 and this thing closed at 53.14, you just lost half of the value of this candle right here. So if you're doing a candlestick analysis, what I'm trying to relay here is that this thing, is getting knocked out, right? So I've seen this happen many, many before. So immediately, when I see something like this dropped, I'm now trying to gauge in my risk reward. So I'm gonna remove this one. So let's just say, I'm a 10 tick trader, right? And I'm saying to myself, well, the price of crude today, if it's gonna make a higher price, it's just needs to break this 41, right? So 41 would be 42, 43. If it breaks above that, if he you know, peeks its head over here, and it goes higher, that means I'm wrong, right? So I'm gonna, you know, I'm gonna, I'm gonna put on a risk since I see this one. The last high was 53.30. I'm gonna risk, 10 ticks, but you can't be above here, so I'm gonna just kind of put it somewhere over here, or so let's just put 2 ticks above it, which is 32, and if I subtract, I don't know, 10 ticks, you know, my worst entry is at 22. So which is right there, right? So let's mark this one. Mark that one. So my worst entry is right here, just because at this level I'm really aggressive, and then if I can get it at a better price, really at 30 is where I want to enter, right? Because that's going to make you look like a genius, like you guessed the top, or you guessed the double top, right? But really, what you need to realize is that when I enter a price, I already know my risk. I'm willing to lose 10 ticks for this trade. So if it goes above it and stops me out, then that's the risk I'm willing to take. Why? Because let's see, retracement. oh no, sorry, extension. So let's just say I'm gonna draw my extension tool here. This was a fib extension tool, but I modified it in terms of 100 percentage, right? So my risk parameter range is from 5232 to 5222, right? So for me, if you look at this, if you look at this area right here, I'm gonna gray it out, right? So this gray box is my risk. So anywhere in here, I'm going to trade, right? Actually, I'm gonna activate. I'm gonna extend it out, right? So anywhere in this box, I'm going to enter a trade. So 5322 being my aggressive entry, and then somewhere even here in the middle would be not so aggressive. But this, trading up here, it's obvious that it doesn't guarantee you that you're going to get you're going to get filled, right? So anyhow, so this is my aggressive trade, 5322, because I really think that there is a chance of this thing going to revisit this low, right? And the question is, can I get 2-to-1 risk ratio? So if I'm risking 10 ticks, can I get 20? So 22 would brings you to 5302, so which is about right here, right? And as the saying goes, trade left. I mean, sorry, look left, trade right. So I'm looking on the. So if the time as this thing ticks up this way, I'm looking at over here and trying to predict where this thing is going to go, right? So if there is a chance that this thing might retest this very low, which is 5236, then wouldn't you not want to take this trade? I mean, it makes perfect sense to take it, just because there's a chance that this thing might revisit this level here and go. No, so now if this thing is just unfolding, so imagine it's like this, it's going up, right? So I'm going to be selling right there, just because I know that this thing meets my risk reward parameter. That's the most important thing. How much is your risk, and does it meet your risk reward parameter? If the answer is yes, and you've seen this pattern over and over, then I would take the trade, well, knowing that I could lose 10 or $100 on this trade. And you know as far as learning experience is concerned, that's something I've learned to accept, that there's a good chance, or there's a chance that I might lose, and that's, like I said, that's part of trading, right? So at this point, I'm already going, okay, well, I'm going to risk here and see what happens, right? So let's just say your candle is right here, and you're waiting for the next candle to form, and suddenly you're feeling good, because now so the 2-to-1 risk ratio means it's this 300%. So I'm always looking at this 300%, and as you can see, that's way. I mean, it could retest 5235, or what I'm already thinking ahead is it could reach 5235 and retest that level, or um, or it just makes a higher low, which is around here somewhere. Higher low, maybe 20 ticks above this, so which is 5235 plus 20 ticks, let's just say, then that would be 55, right? So I'll be somewhere over here. I'll make a higher low and actually use these level as support. So I'm just gonna let's just and these are like the scenarios that's playing in my head. It's like, oh, it still meets my risk reward criteria, right? So at this point, then yes, you're risking $100 to make a potential $1,000, because if this thing actually double bottom, then you actually have a chance of making $1,000. So why not trade it, right? And that's part of trading. And sure enough, you see this thing just made a higher low. It's like 3 ticks from this low right here. So that's kind of my risk reward criteria, and I was actually at work when this was taking place, and and my rationale for taking the trade from earlier, and actually I'm still in it. It just now that the market is closed, it canceled those orders, so I gotta have to put those in about uh, 20-30 minutes. Anyways, so that's it. You just have to I once heard in a my uncle, he's a pretty wealthy guy. He once told me that, before you enter, you must know where your exits are. In any business transaction, you have to know where your exits, where the exits are before you enter. So that advice is just kind of stuck, and I think it's applicable to trading. So here's what I'm defining. I'm defining my risk, and then now this is the entry that I'm meaning. I'm not going to chase the market, meaning I'm not gonna think, oh, it came down over here. So for instance, it could also make you try to chase the market, thinking, oh, what if it goes lower after that? Now I just miss my entry by 7 ticks or 6 ticks, sorry. 53.22, I just missed it by a few. So now you're gonna start chasing, and that's not a good deal, because you said you're only willing to risk 10, and then now if you chase that price, now you're at 53.16, which is probably not a good deal, right? So when you see my videos, and you see me taking trades, yeah, I'm not perfect. Once in a while I'll chase it by 2 ticks or something, but believe me, I got hurt doing that. And then now, this is one of those consistency that you have to keep, is that you do what you say you're going to do. So for this example right here, you define your risk, you know what the reward that you can get, then just take the trade. If you're wrong, if it goes over and takes you out, then at least you know exactly what your loss is going to be. That's what you said, right? Initially, when you enter, you said you're going to lose 10 ticks. There's a chance that you can lose 10 ticks on this trade. So if you lose, then that's, like I said, it's part of trading. You will lose. That's the only thing certain about this market, is that the market is going to take your money. In any event, all right. Well, this video is about 27, almost 28 minutes long. I appreciate you stopping by, asking questions. Certainly more than happy to answer questions for you. Just if I answer your question, I hope you take the time and hit that like button, and that way we could spread the word or whatever. So and certainly, I think the difference between all of us is just the learning curve. So if I can give you a discount on your um, market tuition, then I mean, for me, there's plenty to go around, so I don't mind you know sharing my experience in a way. So I hope this helps. If you have any other questions, just let me know, and I'll more than happy to help you out. So until then, you all have a good one. Take care, and I'll see you on the next video.